Hey, Suffield, Connecticut homeowners, mortgage rates are down a full % from their peak. Want to know the predictions on mortgage rates and home prices? Get some insight in this month's Suffield, Connecticut housing market update. I'm Stephanie Salerno, a local realtor in Suffield, Connecticut, licensed in Connecticut and Massachusetts, here to give you the latest scoop on the Suffield, Connecticut housing market. If this information is useful, please consider hitting that subscribe button below to get future Suffield, Connecticut housing market updates. Okay, so now in Suffield, for the month of July, there were 7 homes sold, and that's up 17% from July of 2023. 7 new listings came on the market, and that's down 30%. The sales price to list price ratio is 102.1%, and that's up 2%. And the average sale price per square foot was $259, and that's up 15%. July's average sale price was $526,000, and that's up 38% from 2023. And the average days on market is 44, which was down 31% from 2023. July's month supply of inventory is 3.57 months, and that's actually down 35% from July of 2023, but that's up from 2.25 months in June. So we did see a bit of uptick in inventory in July. Now, how inventory works is 6 months is considered a balanced market. So anything more than 6 months is a buyer's market, and anything less than 6 months is a seller's market. So we are still solidly in a seller's market in that 3.5 month range inventory levels. All right, so this month we're going to talk about the drop in mortgage rates. And as we sit here right now in August, that's one of the biggest real estate topics out there. And I think we're going to see it be a big topic heading into the fall. And my hope is for the next few minutes, we're going to take some time to unpack where we've been, where we currently are, and more importantly, what they're predicting for the future. So all of this comes on the heels of the Fed meeting on July 31st, where they decided to maintain the target rate for the Fed funds between 5.25% and 5.5%. Now, that's not the mortgage rate, that's the Fed funds rate. But certainly a lot of eyes on the Fed right now saying, what are they going to do? And like I've always said, the indication that the Fed is taking action or lowering the Fed funds rate will be an indication that we're getting through some of the issues that we face in this economy, and certainly we do want to see that. Mark Zandi said it quite well. He said this: the Federal Reserve stuck to the script, holding monetary policy unchanged, but strongly suggesting a rate cut is likely in September. The inflation data must cooperate for the Fed to follow through, but all indications are that it will. Global investors are cheered by this. Stocks are up a lot and bond yields are down. As they should be. The economy is set to soft land. Now, this was written on the heels of the Fed meeting, but now where I sit today, the market is responding and mortgage rates are down. And we'll see how this plays over time, but no doubt we're starting to see an economic shift in our country. And Reuters just did a poll, and most economists, as of a couple weeks ago, felt that the Fed would cut rates 2 times this year. And the Fed came out and said, hey, we're going to do a cut in September. And in pointing in that direction, Sam Cater said this: mortgage rates declined to their lowest level since early February. Expectations of a Fed rate cut coupled with signs of cooling inflation bode well for the market, but an apprehension in consumer confidence may prevent an immediate uptick as affordability challenges remain top of mind. Despite this, a recent moderation in home price growth and an increase in housing inventory are a welcoming sign for potential home buyers. So no doubt we want to see rates continue to come down. And what the Fed decides to do in September will absolutely impact mortgage rates. And if they cut, but not enough, that could even impact rates to go up slightly. But the hope, especially for affordability, is that rates continue to move in a lower, more positive direction. Okay, so let's pause briefly on that topic, because where we sit right now, rates are the lowest we've seen since February, and they're actually down a whole point from their peak. So let's talk about the impact that has on affordability. If you go back to January 2024 and you were to borrow $500,000, just as a round number, but if you borrowed in April, mortgage payments are just over $3,500. You see it right there. Well, today, $500,000 borrowed at a 6.4% on the average 30-year fixed, a little over $3,100. So that's a savings of about $375 per month, and the difference over the life of a 30-year loan, $135,000. So that's great news for those that are now thinking about buying. Now, I'm not saying there's going to be a rush of people coming back into the market, but I am saying that the lower mortgage rates may help people that are on the fence make a decision and ready to make a move. Many buyers last year abandoned their search based upon affordability and cost. It just wasn't affordable anymore for them to make their move. Lawrence Yun said this: there's a large pent-up stored demand that could be released into the marketplace when conditions improve. lower mortgage rates, and more inventory. Inventory is finally turning up about 15%, and that is likely an early leading indicator that we may finally see more home sales as conditions improve. So we're seeing mortgage rates come down and we're seeing inventory come up a bit. So that means buyers have more choices out there than they did over the past few years. Doug Duncan said the same. Listings have trended generally upward of late, suggesting that a rising number of current homeowners can no longer put off moving. So I think we're starting to see the beginning of this turn in the market, and we're starting to see the beginnings of what could be ahead for next year. Now, again, I'm not saying here that we're going to see 1 million people come into the market and the demand is going to go crazy, but we are going to start to see more people get off that fence and maybe now make decisions on making their next move. They may make the decision to say, now is the time that I'm ready to do something. Greg McBride at Bankrate always does such a good job. He says, the hopes for lower interest rates need the reality check that lower doesn't mean we're going back to the 3% mortgage rates. Mortgage rates are 7% now at the time that he actually made that quote. And the best way we may be able to hope for over the next year is 5.5% to 6%. And I think in the next year that could be on the table, but we're going to certainly watch closer to see how that plays out. But with all these changes and reduced mortgage rates and increased home affordability, what is that going to impact? Well, I would make the bet that that's going to impact home prices. I'm sure over the past couple weeks you've seen all the headlines. Are home prices to fall? Here's the top 15 markets that we're going to see prices fall. Now, this is certainly going to be determined by the area that you're in and even certain price points that you're in. Some areas may be overbuilt with new construction, and that's impacting higher inventory levels and impacting home prices market by market. But nationally, what experts are saying is that as mortgage rates fall, that is going to continue to keep upward pressure on home prices, but certainly at a more normalized or moderate rate. And I'll give you the latest forecast on home prices and even what's predicted to head into 2025. Expert forecasts lean towards a moderation in home price growth over the next 5 years. This translates to a slower and more sustainable pace of appreciation compared to the breakneck speed witnessed in recent years, rather than a free fall in prices. This is the latest look of where these forecasters believe we will wrap up 2024. The average of all 7 of these forecasters, 3.1 residential home price appreciation, and will probably end up somewhere between 3 and 5%. Again, mortgage rates will get a little relief. We might see a little uptake in home price appreciation. So that's the look at the national home price appreciation. Again, not people calling for this correction in home prices like it's been said, but let me give you the first look at 2025 home price forecasts, and it's very similar to what's being forecasted, 2.7 as the average of all these forecasters. So as we look ahead, and maybe people wondering prices are going to come down, or there's no way the home is worth that, or there's no way this market continues on, the experts that we follow are saying differently than that. But they are saying we'll be back to a more normal rate of price appreciation. Lance Lambert, who is probably one of the premier experts on pricing, says, even if the average national home price forecast for 2025 is correct, it's possible that some regional housing markets could see mild home price declines, while some markets could still see elevated appreciation. That has been, after all, the case this year. I do think nationally we are going to continue to see home prices appreciate. And I do also think there will be markets, whether it be in certain areas or certain price points, where we're going to see prices start to plateau or maybe even soften. We're already seeing that a bit this year. And as for Suffield, I follow those numbers closely, and I can say that inventory levels have actually been less than what the national average is, and home construction just hasn't kept up. So I am thinking for Suffield, we will follow more that national trend where home prices will continue to appreciate, but at a much more moderate and sustainable level. But of course, I'll continue to follow the data and will bring you those numbers as they come to me. I want to close with this graph right here on my favorite topic, equity. I talk about equity almost every single month because you are sitting on tremendous equity, and it is a great tool to help fuel your next move. But I thought this graph from the St. Louis Fed was very impactful and shows the powerful equity position that we are in right now. This goes all the way back to 2000 and shows equity, mortgage liability, and real estate value. And I want to park here for just a moment. What do you see in green there? Just over 45 trillion in real estate in this country. The blue bar there is 32 trillion in equity on that 45 trillion in value. And that lower bar that you see down there is about 13 trillion in mortgage liability. This slide just shows so well the underlying strength of today's real estate market. A lot of value, a lot of equity, and relatively low liability. If you leave that liability line, it comes up a little bit, but certainly not where we were in 08, 09, and 10, where there was literally more owed on homes than there was equity. And I think there's a message in that equity is a strength of every homeowner out there, and certainly has been the case with the rapid rise in home prices over the last several years. So to my homeowners out there, what's the big takeaway? Well, with the rates coming down 1% from their peak, it might be a great time to revisit your plans and see if right now might be a time to make the move. And as we get closer to the Fed meeting in September, we will be able to see what impact that will have on the mortgage rate market. And forecasters predict increased affordability as mortgage rates come down. And forecasters predict that the increased affordability will keep upward pressure on pricing, but just at a more moderate and sustainable rate than we've been seeing. And you are in a tremendous equity position right now, and that can help fuel your next move so you can make your real estate goals for 2025. If you want to talk more about any of these topics or have any questions, let's connect. And are you worried about how to sell your house and buy at the same time? We do have proven strategies and plans to help you make a seamless move. So whether you're looking to sell or you might just want to discuss what options exist for you, please don't hesitate to reach out because I would love to help you achieve your real estate goals. And if you want to see what your home might be worth, click that link below for an immediate home value opinion. As a local realtor in Suffield, Connecticut, my goal is to provide you with the local insights so you can navigate this market with confidence. If you found this information useful, please share it with a friend and give us a like. And all right, that is your August Suffield housing market update. We'll see you next month.